Okay, good morning everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Erik Sandstedt from Handelsbanken. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you very much, and of course, let me also warmly welcome you to our report of the second quarter for Clas Ohlson, and for you who are here, welcome you to our store at Drottninggatan. It's really pleasing to see so many people here, and particularly see all the items we have for Christmas. The agenda for today, we will of course cover the second quarter. We'll also make some comments around the first 6 months in the fiscal year, as well as then give you a few flavors about what have happened after the quarter, particularly the start of the important third quarter for Clas Ohlson, as well as give some insight about our strategic priorities. And then Erik from Handelsbanken will come and we will have a Q&A session. But as a start, would like to make just a comment about Clas Ohlson as it is today, where we think, internally at least, we have a lot of energy of taking Clas Ohlson further on towards our vision of being an international leading retailer. We're now up at 206 stores. We have sales of a rolling 12 of around 7.5 billion SEK. If I should say couple of words just about the highlights of the report today. I think covering the quarter, we view it as a fairly stable quarter, solid in a way, particularly if you're looking at the currency situation we have for Clas Ohlson at the moment. So solid quarter in general, and then of course when we're looking at moving on into the third quarter, I think it's fair to say that we've had a really good start of the third quarter with our November sales. Well, I'll come back to some of the comments on that. So that I think highlights the report. But then, of course, we will go through the key ratios for the second quarter. And looking then at sales, sales is up 5% in local currencies. We are reporting a flat like-for-like, but I think it's fair to say when we view the quarter, we've seen a positive trend during the quarter. Last time we talked about the first quarter, we had a really strong July, and of course that impacted somewhat in the summer months, impacted the August numbers. So we had a fairly soft August, a better September, and then improving also in October. And as you see in November, it's continue on that direction. So with the negative currency effects that we are currently facing, we are reporting a 2% growth in Swedish krona. We have 10 more stores in the network, and we have opened up 4 stores in the quarter. The highlight of that is, of course, the celebration of our 200 stores, number 200 in Karlstad, that we open up in August. And then we have an opening in Finland and in Norway, as well as we've opened up our newest concept, the smaller concept in the UK in St. Albans. Looking at by market, the sales share per market is fairly equal to what you've seen before, slightly up in Sweden, but still the international business is still dominating for Clas Ohlson, where we have, but still our largest market is of course still Sweden. And if we'll go through market by market, making a few comments around the overall market in Sweden as we view it. Consumer confidence is fairly stable in Sweden. We can also see that is also reflected in the retail trade. I would say it's a fairly strong trading environment in Sweden in general, if you look at the overall retail in the Swedish market. If we view our performance in the second quarter, we are up 6% in Sweden. If we compare to the overall market, that is between 5% and 6%, so a little lower. then of course we view it as we are maintaining our market shares in a fairly strong market in Sweden at the moment. Again, we have opened up 1 new store, and we have, compared to last year, 4 more stores in the network. So a solid development in the Swedish market that is continued to be fairly strong. Norway, last time, and you've seen that, I think if you follow the consumer confidence in the Norwegian market, it's fairly soft. It goes down. The retail development is somewhat volatile. So it goes a bit up and down, and I think it's a market that we are following closely to see how that develops. However, looking at Clas Ohlson, we have had a fairly stable growth in the second quarter. Somewhat there again, if you look at the August number, they were softer, improving in September and clearly improved in October, in November. We have, though, significant currency impact, so we are reporting a negative growth in Swedish krona for the Norwegian market. But in our view, we are continue to increase our market share in this volatile market in Norway. Moving on to Finland. Finland consumer confidence, as you know, is also weak, but particularly I would say the retail development in general in Finland is soft. And we continue to see that the market is not really recovering yet. However, if we look at the Finnish performance that we do in Finland, we are clearly gaining market shares. We are up 5% in local currencies in a very soft market. We have some positive currency effects, so we are reporting a 7% growth in Swedish krona. And we have 1 more stores in the network versus what we had last year. Looking at UK, consumer confidence has recovered, as you may have seen, and continued to be fairly on a better level. UK retail is not really following that trend. We are seeing a somewhat softer development in general in the retail market. Now, for Clas Ohlson's perspective, we are still fairly small in the UK, but what we can say is that looking at the UK market, we are maintaining our performance versus what we've done last year. We are flat sales in like-for-like. Should put in perspective that last year we had a really positive growth, so we are meeting higher comp numbers in the UK, but are able to maintain those levels. Now, we want to see more, but at least we are maintaining these levels. Should also be fairly to note that in the numbers, we have now closed 1 store in Birmingham, somewhat larger store, and we've opened up a smaller store in St. Albans. So of course that is also included in the numbers. Since we are reporting outside Nordic, also like to comment on the store that we have on a franchising basis in Dubai is really continuing a positive sales development, and we'll come back somewhat to that. The focus is to continue now to look at to search for the second store together with our franchising partner in that region. Then moving into the next key ratio that I know is of fairly high interest in terms of what's going on in the market, and as shared with you all in the first quarter, we have a challenging situation with the currencies the coming quarters. But our reported gross margin in this quarter, I think it's fair to say, is coming out somewhat better than we also expected ourselves, particularly mainly through a better sales mix as well as positive currency hedges. Now, looking at it from a long-term perspective, the overall gross margin development is fairly healthy for us. But of course, the trend that we have seen from the currency situation, particularly on the 2 most important currencies, the US dollar and the Norwegian krona, is really going in the wrong direction for Clas Ohlson, and unfortunately they also continue to worsen the direction in terms of how they're developing towards the Swedish krona. But then coming back to what have happened in this quarter, as said, we have had positive effects from hedging. And this just reflects the contribution for the Norwegian krona hedging that has been positive. And when you're looking at our numbers, we're also meeting it last year when we had negative hedges. So the gap there becomes somewhat bigger. So hedging has been positive for us. And in addition, we've had a really positive sales mix in this quarter that has offset some of the currency impact that we are currently facing. This consists of a number of things. One is the mix between the categories and the seasonal effects that we see has gone in the right direction for us. Also must say, when we're looking at our private label, we've had a really positive quarter in terms of share of sales of private labels. Actually, it's the first time that we are reporting, or we're not reporting, but we are seeing a private label share of sales above 30%. So in this quarter, and that differs quarter by quarter, but in this quarter has been a really positive development where the consumers are appreciating all the efforts that we are doing with our private labels in terms of we are focusing on quality, design, and we have all the new guarantees that we are offering to the consumers. And also we've done some price adjustments, particularly related to the dollar-related products in line with the overall market. So we've seen some positive effects also from that part. Continuing then, another effect that we are working on that we see some positive elements from is of course our focus on our sourcing and our focus to become more efficient. We continue to gradually increase our share of direct sourcing, which is also of course somewhat related to the private label development. And we are looking at somewhat lower sourcing costs from Asia, particularly due to somewhat lower raw materials, as well as lately you've seen the changes on the currency, on the local currency versus the dollar or the yen. Now, obviously, this is not impacting the second quarter, but it gives some positive effect over time. And then there is a general capacity that is in our favor at the moment in Asia, where we're seeing when we are working with our suppliers in terms of sourcing our products, that is positive for us in terms of how we are negotiating. Moving on, I'll come back to the gross margin somewhat later on in the presentation, but if we move on the key ratios for the second quarter, our share of selling expense is actually somewhat lower. We are down 0.3 percentage points versus last year. But I think if you look at it, there are fairly small numbers in this. And if you see it compared to some of the other years, we had a somewhat higher last quarter. So we are more in line with what we have seen historically. So I think to sum up it, we've been able to keep good cost control in the quarter, and we'll continue to work on these elements, obviously. That sums up the profit lines for the quarter, where we are reporting an operating profit of 145 million SEK, which is almost in line with last year. And obviously, again, based on the currency pressures, we've been able to balance some of the pressure in this quarter. Our operating margin is 7.8, somewhat lower than versus last year, and we are reporting an earnings per share of 1.76. That concludes the second quarter in terms of key ratios. And then if we move on to just quickly summarize the first 6 months, as we are now having just passed the half time for the fiscal year 15-16. So in sum up, sales is up 6% in local currencies for the first 6 months. Like for like is up 2% in line with our target. We are reporting a sales of 5% in Swedish krona. We have some negative effects of the currencies. And we have now 10 more stores in the network versus what we had last year. Profit, operating profit, 250 million SEK, more or less in line with last year that we had 253. Operating margin 6.9, somewhat down, and then earnings per share 3.03 krona per share. We continue to invest in Clas Ohlson, and we are seeing an increase of our investments of to 115 million SEK versus last year 107. Mainly new stores and refurbishments, but also we continue to work on our ERP program to develop our new IT platform. It's a long-term program that we are now getting 2.5 years into that program. And that goes according to plan. We continue to make some strong investments in this to change the platform overall for the company. It must be said that we are also seeing a strong cash flow in the quarter, or we are reporting 322 million SEK from our operating activities. Our inventories are up, as you may see on the slide. We are up versus last year, which mainly is related to the dollar effects that we are now getting into our inventory. Leads to that our turnover rate at our distribution center is somewhat lower versus what we've reported previously. But also fair to say it's an inventory is also being somewhat up based on all the efforts we are bringing in some of the goods somewhat earlier to make a push for the third quarter. But mainly the inventory pickup is related to currencies. Looking at the net cash, we are reporting now an even further strengthening on that situation versus last year of 354 million SEK versus last year 213. And if you look at it historically, it's really a positive trend development in our cash situation. I think that concludes the period end from that perspective. If we're now looking into what have happened since we closed the books, of course, we need to start with looking at the efforts we have done in terms of starting up the third quarter. And we have, the way we view it, a really high energy in all our sales channels. And looking at November, it's a good start, but also we have very good activities across all the channels. And of course, we are pleased to see that one of our top-selling items, vacuum cleaner, the robot vacuum cleaner, was elected the Christmas gift of the year, which of course is going positive for us. But in general, we have high activities around all the preparation for Christmas with the LED lighting, all the things that makes the home be more Christmas ready. Coming then into the results of that as a start, November came out positive. We are reporting an 11% growth in local currencies. We have our negative currency effects, and of course that gives that we are reporting an 8% growth in Swedish krona. By market, Sweden is up 10, and Norway up 12, and must be highlighted, Finland up 19% in local currencies. And if you follow us, you know that the majority of that is like-for-like performance. So of course we've had a really strong development in the Finnish market during this period, and particularly one must say, looking at the overall market in general, we are really outperforming the market at the moment in Finland. Outside Nordic, more or less the same trend as we've seen. We are reporting a somewhat slightly negative, but again, it's also reflected into somewhat change in the store network as well. We have also opened up more stores in November. We opened up one store in Finland, one store in Sweden, and for you who is living in the Stockholm area, you know that Mall of Scandinavia opened up in the middle of November, as well as we have just recently, a week ago, opened up the second smaller store format in the UK in the London area in Ealing. And I have to say, and I make a comment on that we also soon, not really there yet, but we are almost there of reporting or been able to welcoming the number 2 million, I don't know how you even pronounce it, 2 million Club Clas member of our loyalty program, which of course is fantastic growth that we have in terms of loyalty for Clas Ohlson. It's really pleasing to see how we continue to gain loyal customers into our store network. Currently, this program is existing in Sweden and in Finland. So, future outlook. In terms of when we met last time in the first quarter, we talked about the currency situation, and I think it needs to be said, this situation of course remains, as when we comment on the numbers, and as you see on the graph, the currency is not going in our direction, it's going actually on the wrong direction, it continued to go in the wrong direction. And in the second quarter, we're able then to offset some of this due to hedges and sales mix. But all the same, we know that we will have less supports going forward in terms of the hedges, so that will lead to then further pressure. Now, our ability to work on the sales mix is of course a key ingredient, and we'll continue to work on that. But must say it's fair to say it is difficult to predict at this environment in terms of how the sales mix will develop, because it really is it's many factors that is influencing our sales mix. But so even if we then forecast the further pressure, our focus really remains in terms of working on how we can contract this pressure. We talked about it last time, that we are really following and monitoring the price development in the market in general. We continue to work on our sales mix in the areas where we can influence. And of course, the sourcing is the key ingredients to offset some of this. But I want to repeat myself where I said last time, is that over time, we are confident that we'll be able to balance the currency effects. However, coming quarters, we will have a negative impact, as you may understand, based on the currency situation we are currently facing. Let me then just give you a quick update on our strategic priorities, and I will just start with one comment or a few comments regarding our sales channel development. As you know, one of our key strategic direction is an omni-channel strategy, where we are working on to develop all our sales channels. We continue to looking at our store network. That is not only looking at in terms of upgrading it to the new store concept, that we are taking steps, and we're seeing really positive effects from that. But we're also looking into size per store, we are moving stores, etc. So that is high on our agenda. But also working on the other areas like the e-com platform, that we are really putting a lot of focus how that could work together with the stores. And again, coming back to in our structure, we really see a positive effect of the research offline and purchase offline. So we are using the e-com platform really to support all our channels, one could say. But having said that, we are seeing a very healthy growth on the e-com platform, as well as we are seeing a healthy growth on the new initiative, what we call Clas Office, which is based on looking at or targeting the business-to-business customers. So it's a really positive growth in all these channels. Now, Clas Office, strong growth, but obviously coming from still fairly low levels. UK, continue with high focus on terms of taking the next step in the UK market. We have said that we're going to open up a couple of stores, smaller formats around the London area. We've just opened up St Albans, now we open up Ealing, and I would like to say we have had a positive start in these smaller format stores, but also fair to say that it's early days. We've just been open a week in Ealing and a couple of months in St Albans, but we're following this closely. We think this will create a new engine for us to strengthening our position in the UK. As well, at the same time, we are continue to optimize our current store network, and we're looking at sizes and how we can view it to even become even stronger in the UK market. And then a final comment, Germany is our next step on our international agenda. We As reported, we have 3 contracts ready for Germany. We're all very excited about the steps we're going to take. We're going to open up the 3 stores in 1 city in Hamburg. We're clustering it into Hamburg. Start in this summer with the first store in Jungfernstieg, and then we'll follow up with a couple of more stores. And the more we work on it, the more energy we get. We are having a really good cooperation in the market there. And I would say that all the preparations that we have to date is really going according to plan. So that summarize what I would like to, from a presentation mode, give to you today in terms of the situation where we are facing in terms of the second quarter. Again, a solid second quarter based on the currency situation we are facing. Again, coming back to that, we continue to have these challenges, and we continue to work on these challenges as well. We're also reporting a strong start of the third quarter with an 11% in local currency in terms of November sales. And I think it's fair to say that we have a very strong financial situation in the company at the moment. So with that said, not really yet, I think. We'll welcome Erik up to stage, and we'll go through the Q&A session.
Perfect. Thank you, Clas. My name is Erik Sandstedt. I'm the analyst with Handelsbanken. So I'll start off the Q&A session by a few questions and then open up to the floor. So surprisingly, I'm going to start off with one gross margin question related to currencies, actually. It seems, at least from reading the report, that you are perhaps somewhat more relaxed on the currency-related gross margin pressure now than you were after the Q1 results. Although you highlight that, of course, it hasn't peaked yet, but you don't actually comment on it as such in the quarterly reports. Could you just maybe comment a little bit about that?
No, I think, as I said here, and I think the pressure is still there, as you're saying yourself. What we are continue to work on is, of course, the measure that we can work on. In this quarter, we saw we got some positive effects from hedges that we will not see moving on. But of course, we have also, compared to the magnitude, we have seen also the effects that we have worked on. We have also seen that the market has reflected somewhat more than we saw last time in terms of price adjustment according to the US dollar related products. So in that perspective, it's somewhat better. But I want to be crystal clear here that we are facing a continuing pressure from the currency situation. And again, even if we know the hedges will not support us going forward, we work on some of the areas that we can work on. But it is difficult to look at this and to calculate, because there are so many movements at the moment in several areas. The mix in terms of how that moves, also the sourcing and the ability for us to balance some of these items. So the looking forward is actually somewhat difficult at the moment.
Yeah, sure. You mentioned that you did actually do some price hikes in the quarter. Still, like-for-like sales were only flat. So is it fair to assume that at least initially it had a negative impact on volumes? But following up also on that, the strong November sales, is that increasingly more price hikes in that number?
My judgment is that it's not really related. I think we've had, again, a soft August. If you look at July number, was really strong for us, and then we entered the August number that was really soft, and then we improved that in September and had a very positive October. So I don't think it's really related to that. And again, coming back to, we are never compromising on our price position in the market. So I don't think it's reflected in that at all. However, it's been a somewhat softer fall for us, and particularly than August.
Yeah, but a lot of retailers are complaining about the warm weather in November, for example. That seems not to have impacted you to any larger extent. But could you maybe talk us through any weather effect here, but also I suppose December is always going to be a more weather-dependent month for you, and it's obviously not cold yet in the Nordic market. So maybe just talk through some weather impacts here and shed some light on that.
As you know, I will not comment on December at all. I think the only thing you could say in terms of December is that December will be decided later on in the month, because that's where you get the really December pickup. But looking at November, I think when we view it, we had a positive November development, mainly related to all the small fixing that you want to do at home for preparing for Christmas or for the holiday period in general. And I think that has worked out very well in all the Nordic markets, in how we've been able to meet with relevant products and relevant offers that has been positively received by the customers.
Yeah. Maybe just one final question from me before letting others in. In terms of Norway specifically, you said that you have perhaps not seen any impact from the slowdown in the consumption environment, but could you talk a little bit about it on a regional basis? Have you seen a bigger impact in oil-related cities such as Stavanger, and better performance in the Oslo region, and so forth?
Somewhat, but not to any large extent. Of course, we are, again, coming back to, we are a low price retailer, and the needs that we are offering is on a ticket value that is fairly low. I think looking at Norway, it is a volatile market. What we saw in the beginning of the fall was a bit worrisome, but I think it's positive to see that it seems, at least for us, that the consumption now, looking at October and also looking at November, we are back at good levels again.
Perfect. So,
hi, Niklas Ekman here from Carnegie. Just coming back to November, you mentioned preparations for Christmas, but we had Christmas last year as well. So I'm just curious.
Fair to say.
Fair to say. And I mean, the weather impact can't have been that positive. Is there anything you've done differently in November? Have you been more aggressive with campaigns or anything else? Or I'm trying to see why the sudden pickup going from a rather weak sales quarter in Q2 to a much stronger start of Q3.
No, I without exactly disclosing what we have done, but we have changed some parts of what we have done for the preparation this year, and I would say we are pleased to see that what we've hoped for has also given a positive result. So of course, yes, we had Christmas last year, but we have made some different activities and some different planning in terms of campaigns and activities and what we are offering in this year versus last year, and we are obviously pleased to see that worked out well. So we made some stronger push in certain areas that has had a positive effect. So fair to say we had Christmas last year, but I think that the changes we have done versus the learning we had from last year has developed nicely.
And can you say anything? I know you don't want to comment specifically on December, but are these short-term campaigns? You've started campaigns earlier. I mean, trying to see if this is something that will sustainably push Q3.
I know you want to know that,
yeah.
but I think it's no. But the only thing I can comment on is November, and again, obviously we aim to of course to have a positive third quarter in general in total. So of course that's what we're focusing on. But we are pleased to see November outcome, and then coming back to December, also many influencing factors for December in general trading and so forth, so that we've not seen yet.
Can you say something about store expansion in 2016? Because you open a lot of stores in November. I think you have now 6 or 7 remaining store contracts. Well, three of those are in Germany. So are you looking at signing a lot more contracts
We are targeting 10 to 15 stores this fiscal year. We're still looking at meeting that target. But most likely, since based on the contract, it will be in the lower end of that span. And then we'll come back in March to talk about 16, 17 in terms of target for number of stores.
And UK, you talked about how you're looking at sizes. Are you basically looking at, like you did with Birmingham, shutting down stores and maybe opening other smaller stores? Is that what you're looking at?
What we're looking at first now is to get the new smaller store formats out, which we're pleased that we're able to do so fairly quickly. But the program also is clear that we are looking at optimizing our current store network and working on that parameter as well, which is related to then looking at sizes, and there may also be some stores that we are looking at moving. So the program consists of two parts: strengthening the store network in the London clustering, as well as looking at the overall store network of optimizing these areas.
Okay, thank you very much.
Thanks. This is Nicholas with SEB. Good morning. Can I just start by asking a little bit about cash flow and stock and trade developments? Obviously, there's apparently most of the inventory increase is due to the currency. So when I just look at the chart, it seems like 6 months back when you source what you're going to sell this quarter, the US dollar pressure is slightly less actually than it was affecting the quarter fiscal Q2. So assuming that the peak in the dollar is actually behind us, no one knows where the dollar will end up, but based on today's spot rates, would this be the highest increase in stock and trade you expect to see?
Let me make it.
Or is there any lead times we need to be aware of?
I understand. I think Göran, our CFO, you will answer. But my quick comment was that will be that if you look at it, we're not really peaked yet. But maybe you want to make it further.
I mean, last Q2 we had an increase mostly due to the US dollar effect that was much higher than this Q2. So from that perspective, we have seen the major increase in inventory related to the US dollar. That is now actually also rolling out in the P&L. But you're correct.
Yeah, okay. And a follow-up question then would be, if we look at the change in working capital in this quarter, is quite lower than in fiscal Q2 a year ago, despite a 10% increase in stock and trade. Could you outline the moving parts here, please?
I mean, the answer is actually the same. We had a larger inventory build up in Q2 last year compared to Q2 this year.
Thanks. Can I also ask you, when it comes to SG&As, it's I have to say, a very impressive performance, and just so that we don't extrapolate any trend that we shouldn't, could you give us a little bit more detail into your cost development, please?
No, we could, and I think, but again, if you look at the, I think we had 5 quarters in a row showing that the last year number was a bit high. Now we are 0.3 below. I think we have somewhat lower startup costs for new stores in this quarter. But also when you're looking at it, and I know you follow this, is that the cost for we have negative currency effects for Norway, but of course from the cost side that support us on the other side in that perspective. But I think we are clearly working on maintaining cost control. I think the work that has been done, particularly in the stores, based on the environment we've seen with somewhat lower trading, they've been able to adjust according to, done a fantastic job out in the store network to adjust according to sales. So we are pleased with that.
Just a little follow-up question then. The 3 stores planned to open next summer in Hamburg.
Yep.
Where are you in terms of planning and charging your P&L for those related costs? Is that generally going to happen when we get closer and closer to the actual opening, or have you actually already done a lot of
No,
costs
but I think the
associated?
preparation is minor cost for this opening, and the majority of the cost will be when we start to open up and when we start to hire the staff that will come a few weeks ahead of the first store opening. But then if you're looking at it from a fiscal perspective, the majority of the cost will come into to 16, 17.
Thank you.
Sorry. Yeah, Martin Arnell with DNB Markets. Can I just ask you on pricing? I know you don't want to comment on your own effect there, but what's your assessment of price hike in the market related to this dollar move?
I think the market in general has taken steps, not to compensate fully, but it's been taking some clear steps.
You expect not to compensate fully, so you expect it to continue?
I think the market, as we are, you need to follow how this goes. And again, we talked about it more, I think, last time. It's also it is where you are reflecting the market and you're taking steps, and then you're seeing how the market is following, and then some further steps will come. But that also takes some time, which of course is a natural step in this environment.
Yeah. And also on your private label share, you said you were above 30 now. Do you expect that to continue in the coming quarters, or have you reached like
I think it could. I mean, it's a good question. I think it could really vary by quarter and by compared to the seasonal change and the seasonal offers that we have. In this quarter particularly, we had a lot of positive development from our own private labels in this season. So it could vary, but I think if you look at the long-term trend, now since I've been here, I think we were starting at 14-15% share of sales. We had a target of 25. We have reached that 25, and I said we've been between 25 and 30. I think we'll still be in that area, but then of course some quarters we could also be slightly, or apparently, even reaching the 30 number. And coming back to the long-term part of this, our effort is crystal clear in terms of we continue to put a lot of efforts in terms of quality, design, providing warranties for the customers to have a good alternative to some of the other brands that we sell. We're going to sell all the areas. As a customer, you should be able to get a known brand as well as a private brand and a no brand. But it's our ability then to offer you an alternative that is attractive enough. And then it's up to the customers to reward us for that or not. So the direction in terms of how we are developing our private labels is clear. Then based on the outcome of that will be, of course, our ability to be successful and what the customers will say.
Okay, thanks.
Operator, do we have any questions from the conference call?
As a reminder, it's 01 on your telephone keypad if you have a question. 01. There are no questions at this time.
Yeah, sure. I want to ask two questions about the UK. Firstly, looking at it perhaps short term, you are now closing down some of the larger stores, which perhaps haven't worked that well, but you're opening up smaller formats where economies might be a lot better. But what's the sort of the net effect here short term? Because it might take a couple of years for a new store to mature, even if it might be better over time. So just maybe talk us through the net impact here from sort of closing down a large non-performing store with a smaller, arguably better one over time.
Well, of course, it depends on how the smaller stores will develop, but I think the general thinking is, of course, that the smaller stores, even if they will take some time, but also they are faster to reach the profit levels we want to see. So of course there is an impact on that, and even if they are smaller, we can reach faster or better economy in these stores than the larger one.
Yeah. And is it fair to assume that you have clearly lower losses in the UK now compared to, let's say, 3-4 years ago?
Yeah, of course. I mean, the part of the investments we do in UK is also related to the sales development in the UK market. And if you look back a couple of years, we've had a positive sales development also in the UK, which has supported us. Now we are in the last quarters. Now we reported a flat sales, but we are still on a higher level versus where we were 3-4 years ago.
What would be needed for you to actually reach break even in the UK market?
I think the plan that we have announced and that we're working on will be supporting to that. That is to strengthen the network with smaller stores. And then also, of course, in parallel to that, working on our existing network to optimize that, to reduce store space and also in certain areas move some stores.
But would you need a local distribution center to minimize
No, I think in
transportation
terms of
costs?
the G&A cost and the distribution cost, that is not the issue for us. We need to get sales per square meter up.
Yeah. A couple of more questions from me. Firstly, you touched upon it a little bit, but you are performing really well in Finland. In November, you're actually flying. What is driving that, given that the market is actually performing quite poorly?
Well, of course, I would like to say that the plans that we have done, the team in Finland is doing a really good job as a start. The staff in the stores and the management team is really taking steps, which is pleasing. The activities we've done is working, which of course is one element. I also think that in this market, the low price actors is also gaining market shares in general. So of course that goes to our favor, being a low price retailer.
Yeah. Good. And then just one follow-up from me in terms of the gross margin, actually coming back to an earlier question there about stock in trade, but looking at it then more from a P&L perspective, just to make sure that we get it right. The actual dollar effect has not peaked yet, given the lead times.
Correct.
Is it fair to assume that it will be Q3 that will be the peak quarter on a gross margin level?
At the moment, yeah.
Yeah.
With everything all equal.
Yeah. But would Q4, because it's going to sort of start decelerating a little bit in Q4, will Q4 be at a better level than what you had now in the second quarter? I'm just trying to get a feel for the lead times here.
If we peak in Q3 and then if keeping on the same level, you will be then, of course, then Q4 will be less good than this one. Since you're peaking in Q3, you will be on that.
It's peaking, but is it coming down? Is it coming down below this level that you had in the second quarter?
No, we're not saying it's coming down.
No.
But of course, it's again, the dollar, as you see, is not moving to the other direction at the moment.
Yeah.
And then if it will happen, that happens, of course, then you have again lead times until you can benefit from that.
Yeah. But given the lead times and that things will actually not peak until the next quarter or the current quarter for you, is the market now accelerating price hikes, or is the market at a level where it's no longer possible to raise prices more? We haven't seen that much price hikes, have we?
No, I think as I made a comment on the previous questions in terms of we've seen the market been adjusting but not taking it fully out, and I think this will go in steps, and we and the market is following this, and then you gradually move on. As I said, coming back to that over time, I think this will be balanced out, but I think we need to be clear on that it has a negative impact short term.
Yeah. Just my final question. How much scale effect do you get now on your distribution center in Interim, which you have ramped up quite a lot over the last couple of years, to be able to facilitate perhaps some 250 stores, but you haven't been there. So I suppose for every store you add on now, the incremental
Based
margin
on the fixed
cost should be
correct.
pretty good.
Correct.
I mean, I'm not asking you to quantify it, but could you just talk us through how the dynamics work here?
No, of course, on the fixed cost, it will go in the right direction. But then, of course, compared to the numbers that we have, it's not that you see it goes in the right direction, but it's not going to change your model.
No, but you did comment that improved logistics has had a positive impact.
Correct. Improved logistics. We've been able to continue to work on our efficiency measures on the distribution center, but also reminding that we also been working on our transports and our transport agreement and how we're working on that, which has also been very supportive. We started at July last year, so we were around the clock on that in the first quarter. But of course, that has supported. Now we'll continue to see how we can work and trim on these areas. As we said, we are even working now with train out to Norway that is supporting us also from an environmental perspective. No, we see that we can continue to work on our efficiency measures in that. And as you're pointing out, we can now add more stores in the existing distribution center without making any larger investments.
Yeah, perfect. Any final questions?
Smith. I may have put this question at a previous, but if so, I have forgotten. Strategically, when it's about the UK, clearly you need more than 12 stores to establish the brand there. And next year and the coming years, you will have to put quite a lot of focus on Hamburg and Germany. Have you ever considered to make a partnership in the UK with a financial partner that contribute finances so you can expand in the UK with more stores and get the Clas Ohlson name brand clearly established?
My viewpoint, it's not. We are not stricted in terms of financial efforts in this perspective. For us, it's important to make sure that we are building the brand and we are getting the profitability we want to see over time in this. And if you look at getting in another, it's not related to more stores at this stage, because we need to get the store network that we have, which are really located in good areas. We built the brand. If you're looking at the brand perception currently, we are reaching a brand awareness of over 40% in the UK. So we're starting to get established, but we need to get more out of the existing parts, and I think that is an important. We want to see more of that, and that's why we are working also on the smaller formats, so we can accelerate on that agenda rather than accelerate with larger stores out on the countryside in the UK.
So the answer is no, you haven't considered a partnership.
We have not considered a partnership, and for the right reason, I would say. It's not that we need more financial strength to build it. We need to work on it to make sure it becomes right before we can accelerate.
Perfect. Any final question? Otherwise, I think we wrap it up. So thank you very much, Clas.
No, thank you all for coming again. Now it's time for the Merry Christmas, and you know the store is opening and is open soon. So hope you find your Christmas shopping here. Thank you.
Thank you.